Good evening, traders and investors. It is Tuesday, September 30th. Taking a look at the charts, markets are unfolding as we kind of anticipated, hoping the market was going to have a little gap down and spook the market out this morning with the pre-market little gap down. And we talked about yesterday, I think it was yesterday, about the Fibonacci target here, this bull flag that was forming. So we talked about on the 30-minute chart. It's rallying up, it's creating this bull flag pattern after it created this gap and this fade down, and that it points to higher pricing. And we took this analysis and it points to roughly a move on the SPY up to about 672. So it's starting that move higher. We had a nice push off the lows from yesterday, and we're seeing this market want to push up. From where we are right now, we could see the market run another about 1% from where the market's closed today. So this little bull flag pattern has started that run. We might get a little hiccup here at the 668 level. Typically, if price moves to the 618 and we have a little bit of a hiccup, usually we're going to see the second half of that move unfold and reach that 100% measured target move here. So overall, money started to flow into the markets the second half of the day, or really late in the afternoon. If we zoom in on the 10-minute chart here, you can see today around 2 o'clock, money started to move in and really just kind of kept piling in with lots of volume and driving the markets higher. We have the S&P 500. If we zoom in on the daily chart here, in striking distance of hitting new all-time highs. Let's just take a look at the futures chart here. The futures chart again, moving higher, looking to push to new all-time highs again. If we take a look at the VIX is relatively flat on the session, but continues to be relatively low in the grand scheme of things. Not a whole lot of fear. And if we look at the put-call ratio, up about 10% this morning. Put-call ratio has lost its insight. It's actually not really giving us much here. There isn't an extreme reading at this point. It's actually telling us that this market could go higher, which is a good sign. So if we take a look at where else money was flowing today, we did see healthcare have a big pop today, up 2.4%. There must be some news in that space because it is huge volume. So something's definitely moving in the healthcare space. But in the grand scheme of things, it is a pretty ugly chart. We talked about this the other day. Not a big fan of the healthcare space. Ever since 2022, there's been a lot going on in the healthcare space in the United States that I think has really messed with figuring out the profits and potential of these companies. Hence, the price has been all over the place. We got a couple questions on gold. One of them is one of the members wants to know why we aren't in gold in the ACS strategy, because it's outperformed the S&P 500 dramatically. A couple answers for that actually. The ACS strategy does not cover precious metals. It's focusing on, we're either long equities, bonds, currency, or cash. We're focusing on the biggest asset classes, and we just rotate. We reinvest our capital into whichever one is moving up. We're not looking to catch sectors and commodities and things like that. We're managing an entire portfolio based on holding big assets, not individual pockets like precious metals and other things like that. So that's number one. The second is, if you've been following me, you know that if you've been following me for even a really long time too, you'll know that I own precious metals. I've been bullish on precious metals since the breakout, the start of the last super cycle in 2019. I talk about how I have a lot of physical metals and I'm letting it mature, and how I'm actually looking at potentially trimming off and exiting my physical metals, potentially, depending how price goes parabolic here over the next potential 6 to 8 weeks. It could lighten that load and move out of it. And on top of that, we have gotten long gold in the ACS strategy, and we're playing this run up. We've already hit a target a couple of weeks ago. We're running up to the next target in gold. So I'm not 100% sure, I try to repeat our positions and cover all that stuff repeatedly. But overall, we are in gold for multiple reasons. Long-term investment, physical gold. Everybody knows I'm long and I own it. And then, of course, the short-term play, we are long gold as well. And we don't play gold in the ACS strategy, other than the discretionary trade, the bonus trades, when there is an exceptional play like the one we're in now, where it's a pretty obvious play and we want to get some money involved in there and take advantage of it. The other question around gold was talking about our next target for our gold play, and they were wondering if it was more or less up around 4,400 based on Fibonacci. So the Fibonacci that I use here, we're going to grab this low, we're going to grab this high, and we're going to grab this low over here. and I can just carry that forward. So this gives us the levels of where gold should be moving. So the first target here is at the 618, which we've hit that target. And now if you've hit that target and you have a bit of a hiccup and pause, we usually go up and hit the 100% measured move. The next level is around 4,100, 4,900 or so. And based on where price is right now, that is about 6%. And I think this person asked more so a day or so ago when it was about, it needed to move about 8.5%. So based on where the price is, that is where we're going. 4,400 is a long ways up here percentage wise. Definitely not looking up there. We're looking for the move from our current price, which is about 8%. Or well, not anymore. Now we're about 6%, 5% from that next target in gold. And we'll see how things unfold from there. Let's take a quick look over at Bitcoin, which had a really nice pop yesterday. But again, in the grand scheme of things, these big pops and moves happen all the time, and they can easily fizzle out. You see we get these big reversals the following day or so. It could be the start of something, but in the grand scheme of things, again, it's kind of lost its excitement. It needs to prove itself. It needs to really move and break this falling trend. It has this kind of falling trend line through here. It's kind of flagging sideways. I'm not that interested in Bitcoin at this point. And even the fact that it poked up to a nominal high, we'll just have to see how the chart pattern unfolds. I know some people are getting excited about Bitcoin. It's amazing how, it can be really bearish. People are nervous about it. And then one update and everybody seems to want it again. It's the way the markets work. It's normal to feel that way. Especially if you're really focusing on one or two assets, like, either Bitcoin or precious metals, it's very easy to feel like you're being left behind, or that your emotions are in control and you're trying to figure out what to do. Another member wanted to know about the 10-year note. He recalled me drawing this a long time ago, and I'll pull up the monthly chart. And he says it looked like I went up to around 7.5% or so. So if we go back to the long-term monthly chart of interest rates, obviously most investors are used to a falling interest rate. That's pretty much what everybody's financial models have been built around, but based on relationship and past trends. But advisors and things never change their strategy, even when the trend reversed. And most people are holding bonds and have suffered pretty dramatically because of it. If we take a look at where we are now, obviously all the moving averages are sloping up. We have had this huge move to the upside, and I mean, would be devastating, I think, for the United States. But overall, it's building this giant potential launch pad. And whether it happens or not, the charts are still pointing to this big price of about 8%. We're looking at 6.4% and then all the way up to about 8% interest rates on the 10-year note. And this person wants to know what would happen to TLT if that took place. If that was to happen with TLT, I would think we would see a pretty massive decline. I'm just going to see if I can throw TLT in here. So if we take a look at TLT and the interest rates, obviously as interest rates fall in the upper chart, typically bonds want to start to move higher. And obviously when rates go up, bonds are going to want to go down. They're kind of an inverse picture. Now, if we were the TLT chart doesn't go back very far. It only goes back to 2002. But we can look at the price of bonds in general in a nutshell, which is a better, clear indication. So if we look at bond pricing, we zoom back, you can see the difference as far back as bonds go on this chart here. Interest rates put in a top, bonds put in a bottom. Interest rates fell for 40 years. Bonds went up for 40 years. It became the norm. Everybody relied on it. Everybody bet their life savings on it. And then, of course, we saw a major top put in, and of course, a bottom put in interest rates, and then they started to go higher, and that put a top in bonds, and now bonds are in a downward trend. So there is potential here that we could see bonds continue to unfold and move lower. If rates go up, bonds could go down. So this is not a guaranteed bet. A lot of people have been trying to pick the bottom in TLT for a very long time, for the last couple of years. If we just look at TLT here, it's a dangerous scenario. The bottom could fall out and we could lose, another, who knows, 10, 15, 20% or more in the bond market if rates were to, for some reason, to explode higher and shoot up for whatever chaos is about to potentially hit this market. So anyways, that's my take on that. And really that's about it for the day. We'll see how the rest of the market unfolds in overnight and pre-market. But the market's posted a nice gain today at the second half and muscling its way higher. And the short-term charts on the 30-minute chart shows that we should be, entering this bullish environment. We went overbought FOMO to oversold to a nice bull flag, and now price is starting to make that run. And we might see another 1% move and all-time highs potentially even tomorrow, which is going to give a lot of investors who are not long this market some serious FOMO when it just keeps pushing to new all-time highs month after month and you're not involved on it. Anyways, that's it for now. Take care. Bye-bye.